Hey everybody, Gary with Basecamp Trading. Let's take a look at how the market closed today. We know that often, and we were talking about this in the room, often at the end of the day we get a big dump in the S&P, or sometimes we get a rip your face off rally in the S&P. But today we weren't really looking for either one. And here's why. Today's the last day of the month and options expiration. And if you go into the options chain and you look at the SPX, you can see that in open interest we had 24,462 puts down here at 25.75. And you can see that on the call side we had 12,500 at the 25.90 range. We had another 12,000 up here at 2600. We had another 12,000 all the way up here at 2650. And what we are looking for is, where is an area that if price closes at, it will allow as many of these options to expire worthless as can be. Because the big money sellers, and it's primarily big money selling options. Now, there's some retail traders that do some option selling, but for the most part, it's the big players that are the sellers when it comes to options. And so it's to their advantage to get as many of these options to expire worthless as they possibly can. So again, we have blocks 12,000, 12,000, 12,000, and we were real confident that this 24,000 was not going to get hit. We were feeling pretty good that price was at the very least going to stay above this. Again, that's a large number of contracts, and the sellers of all those contracts really wanted and needed price to close above 25.75 so that these would all expire worthless. And so price did kind of mosey up and down. It kind of jumped around and got a little crazy, especially towards the end as everybody was jockeying for position. But you can see they closed it right in here to where as many of these options would expire worthless as they possibly could get. We had a similar situation looking at the SPY. We were actually talking about this in the room also, and honestly I kind of expected them to pin somewhere near this 260 range, because we had this big block of 19,000 right here, and then we had this huge block at almost 29,000 down there. So we were feeling really confident that price was going to stay above 255 in the SPY. Thought maybe that they would try and push it somewhere near this 260 to get this block of 19,000 to expire worthless also. But I guess they figured with, the 9,000, 7,000, 17,000, all these additional ones, you had 11,000 there, 19,000, all these additional calls expiring worthless make up for the little bit of difference here. But again, we're feeling really confident that they were going to make sure that price closed above 255. Because again, you had a block of 28,792 options right here at this strike price 255, and again it's to the advantage of the big players who sold all those options for them all to expire worthless. And of course, the sellers are the big money people, and they're the ones that have the ability to move price around and have the deep pockets that enable them to move price around to make sure that all this expires worthless. And again, we knew pretty confidently that we were going to stay above 255 just because there was this block at 28,792. You had another block here at 22,648, a huge block down here at 38,834. Again, it's to the seller's advantage to get as many of these to expire worthless as possible so that they keep the premium that they sold them for. And so it's just kind of an interesting way to look at the market at the close on option expiration.